It's about that time of day again. My name is Joseph. Monday evening already, May the 7th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for tomorrow morning's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bullish and testing the low of a massive hidden channel pattern. So I'm looking for buying opportunities, and I have my eye on a seller failure pattern to get back in on this move, going back to retest the high tomorrow morning. The S&P is bullish as well, with a big old spike in channel of its own. So my plan is to look for buying opportunities, but after a deep pullback off the highs tomorrow. Nasdaq is also bullish with a wide spike in range pattern, and I have my eyes on a seller failure pattern below the low of this range for a move back up to retest the high tomorrow. Gold is range bound with a triangle pattern this evening, so my plan for tomorrow is to fade the breakouts using failure patterns at the highs and the lows of that range. And wrapping up tonight on the euro is bearish, but I have three big clues telling me to watch for a possible reversal and buying opportunities tomorrow morning. Speaking of tomorrow morning, we're coming out of a big reaction Monday session. That's the Monday following non-farm payrolls. And I have to be honest, we've got quite a bit of challenging setups on the charts to use for tomorrow's session. So the name of the game today is going to be setting things up for tomorrow, but then staying patient and disciplined on Tuesday morning. And as always, I have a great newsletter in store for you guys and gals tonight. With the right strategy, we get a bunch of great, reliable patterns setting up for tomorrow's session. Before I jump into those patterns, before I put the charts together for Tuesday's session, I do want to remind you, if you're here watching me this evening on YouTube, you can find a detailed description of the entire strategy written out on my blog here at sidewaysmarkets.com. I'll leave the link in the description of the YouTube video. Also, if you have any questions about anything covered in tonight's video, please don't forget you can always post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and be sure to hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. Upper left-hand corner, give me your name and your email address, and I'll shoot you an email every time I publish something new. Don't forget, I'm always posting updates, charts, links, quotes, videos throughout the week on my different social media channels. If you're on social and you want to follow me, lower left-hand corner for all kinds of interesting content throughout the week. And then speaking of charts here for this week, you can grab all the charts from tonight's video, have them ready on your computer, right where it says click here to download today's charts. Grab those charts and be ready for tomorrow's trading session. And speaking of tomorrow's trading session, upper right-hand corner, grab that free pass. Come out and join me as a guest in our trade room this week. If you're not a member here at School of Trade and you'd like to come out and learn more about the analysis techniques that we use, the entry triggers we use, the patterns, everything we do in our trade room, grab that free pass in the upper right-hand corner. You're more than welcome to pause the video right now, grab that free pass, and then resume, right? I'll be here waiting for you once you're done. So definitely make sure you grab that free pass. And if you have any questions about that free pass, hit me up on live support on the right-hand side of the website. All right, enough of the introduction. Let's jump right in. Tomorrow morning is Tuesday morning, May the 8th. We are going into this first or the second full week of the month of May. The second week of the month is usually relatively quiet. You'll notice there's no news tomorrow, little bit of news on Wednesday. Most of the action will come on Thursday morning because we got that inflation number at 8:30. And as you can see here, Friday is pretty much wide open as well. So there's not a lot of news on the schedule here for this week. Most of what we see here going into tomorrow's session, we get a big move up on the E-minis. We got some range-bound markets on gold. So it's really going to be dominated by charts rather than economic news, because tomorrow there's nothing on the schedule for tomorrow's session. We got Jerome Powell speaking at 3:15 Eastern time, but by the time he's done, we'll just be waking up here in the U.S., right? So I'm not expecting that to be a big market-moving event here. And again, it's not really until Wednesday morning that we start to get some news here to work with here for this week. Coming out of non-farm Friday, last Friday, today was Reaction Monday. And like I said earlier in the introduction, There's a lot of real choppy, sloppy charts we're working with here tonight, and we're going to do our best to put the plan together, right, and trade that plan tomorrow morning in our trade room. So let's jump right in. Let's take a look at the charts here for tonight and see what we have here to work with. Starting off tonight on oil, and then we'll go over to the E-minis, the S&P and the Nasdaq, over to gold, and then, of course, we'll wrap up tonight on the euro. I start here this evening on crude oil. Crude is bullish with a trading range this evening, telling me to focus on failures with the 2-try rule to buy the low of this range tomorrow. It's also easy to see this market is quite bullish in the long term, and we've recently pulled back to the low of this kind of hidden channel support area. So all I need now is to see some seller failures and then ride this sucker back up to retest that high. So I start off tonight on oil by zooming all the way out. And you can see, of course, last Friday, last Thursday, last Friday into the first, really the most of today's session, were all nothing but bullish. And this is going to be something you'll see on oil, on the S&P, and the Nasdaq, and that is we've had a real strong run here to the upside of the past, 3.5 trading days, and it's starting to feel like these buyers are rejecting the idea. You'll notice here on oil, we couldn't quite crack through those highs at all here today, and it led to, kind of this collapse off the high, which we assume are just the buyers who are already in the market. We assume those buyers are taking profit at this point, right? And that's what's causing this market to pull back off the high. So again, I'm lining up these highs. I'm bringing it down to that low, and you'll notice we're right down around the low of that really large channel. And I'm looking for buying opportunities right now to go back up to retest the high of that channel. So that's the basic idea of where we are right now. Now, if I zoom back in, you can see we have this trading range, right? The short-term move higher into the range that we pretty much spent most of the day today. It wasn't until just before the closing bell at 2:30 on crude that we saw the market really kind of collapse off that high. Most important thing right now is really a combination of 3 different things. One is the fact that we have a strong move up into a spike in range. That spike in range tells me to look for a seller failure on the move lower, which would be 1 try, 2 try, and failure back higher. So anytime I see a spike in range pattern, which is what we're seeing right now on oil, right, strong move up into a trading range, I know I now want to be a buyer after we see a failure pattern off of that low. The second big clue is, again, that big, large channel, right? That's going to act as a major level of support, and I want to be a buyer off of that level of support. The third clue is the most actionable clue, and that is the strong move down. Anytime we see a strong move down, I always have to assume we're probably going to see a pullback to the moving average, and they're going to try, they may not be successful, but they're going to try to make another lower low. So with that said, I know I have my trading range. I know I want to buy going back up into that range. I know I have this channel low. I want to buy off that channel low. But at this point, though, my big concern is this strong move down. I need to wait patiently here now to see those sellers try one more time, and then I can start looking for buying opportunities going back up into that range. So that's the overall plan here for tomorrow. Let those sellers try to get one more leg lower. If they're successful, we'll turn bearish. But if they're unsuccessful, this becomes a great opportunity for me to buy going back up to retest that high for tomorrow. So here's ultimately what I'm looking for. We have that strong move down. Strong move down tells me we're probably going to see sellers waiting at the moving average. We pull back to that moving average. I'm expecting to see the bears try one more time. Now, once they try one more time, now we know where their stop losses are. Their stops will be hanging out above that swing high. In a bull market, I want to look for an opportunity to buy at a support level, such as the low of this channel, with the goal of getting in where the sellers, the counter trend sellers, are going to be getting stopped out. So if I can anticipate where their stops are, I can then look for the first round of buying opportunities with a seller failure. Well, that seller failure almost always leads to strength going higher. And that strength going higher will bring that moving average back up around. Now the buyers don't want to buy high, they want to buy low. We have a level of support here, a level of support here, and now we can look to buy the pullback on the way back higher. So again, I'm looking for a seller failure pattern coming off the low of this channel, followed by a buyer pullback pattern and a move going back up to retest the high, right? That's my target. So a two-try rule, right? A two-try rule, one try, two try, seller failure into bullish strength into a pullback, and a pullback going back to retest that high. Now, I'm going to cover a lot of terminology like this in tonight's newsletter, and I want to make sure you get the most out of our time together. So in order for me to give you a little bit more of a deeper dive into all of these terms, for example, how does a two-try rule work? How does a failure pattern work? What is a hidden channel? What is a spike in range? All of that terminology, as well as more details on all the entry patterns that I use. What I'm going to do is this. I'm going to give you guys a free trading course in the upper right-hand corner, right? Grab that free class. Not to worry, pause the video, register for the free pass. I'm going to send you an email, and in that email box, I'm going to send you a link to watch a video, and that video will walk you through how I set up my charts, all the tools I use, the entry patterns, trade management, everything's covered there. That way, when you come back and watch the rest of this newsletter, and you keep watching my newsletter every evening, right, Monday through Thursday, you'll be able to get the most out of our time together. All right, so grab that free class, upper right-hand corner. It's in the information icon, and I promise you, you'll be thankful to get that extra information, so you can really make the most of this time together. Right, so two-try rule: failure, strength pullback, back to retest that high. That's pretty easy. Now, how do we turn bearish, right? What would the bears be looking for right now? Well, what they need is they've got a strong move down. The bears need another leg lower here on strength. I want to see these sellers really push lower on strength. Do not, right? This right here, if we do something like this, that's not going to be on strength. Okay, if we just make a little tiny lower low here, that's not going to be enough for me to call this a bear market. I'm still going to look for that move, right? That move back up, and buy that move going back in again, right? I'm still going to look for buy there if we don't get a strong move lower. So it's got to go strength, pullback, strength, right? Those are the three things we look for when it comes to a trend reversal. If I can get that reversal, if we can really push lower, I'm going to connect those two lows. I'm going to connect to that high, and I'm going to look for that level there to be resistance, this to be resistance, and I'm looking to sell up at that level of resistance, right? It'll probably be relatively early in the session tomorrow morning because it'll probably happen overnight. We'll see that drop, right, that next leg lower, and we can look for that sell, right, going back down again. At that point, if the bears can take control of this market, there is a lot of room below us. I mean, you've literally got $2.50 of movement back down to that 67 even area where most of this party started at the beginning of the month of May. We're too bullish right now to be trying to sell, but I am looking for that second leg lower, grab that new channel, and again, look to sell off the high of that channel. And we'll know more about that tomorrow once we open up our trade room with all of our clients, and we'll do it together. One last thing here, right, for the bulls. If we do get this move running hot, right, going higher here tomorrow, we've got a great example of a trading range. The amount of the break down is almost always the amount of the break up. So if we can find a way into this, we should be able to find a way into this move going back up. Look for that runner target up around that 71.5 area either tomorrow or maybe later on in this week, depending on how much volatility we see in tomorrow's session. Got a great strategy in place there for you guys on oil. All we need now is to see these sellers fail, or I'm always open-minded, right, to seeing these bears take control. I just have to wait to get more proof. Now, over to the E-minis, and once again, we're still going to have that central theme where it feels like we've gone a little bit too far, right? Too far, too fast, and it feels like buyers are rejecting the idea of buying high right now, so we really want to focus our energy on buying as low as possible this week. S&P here right now is bullish with a spike in channel pattern, and just like every spike in channel pattern, we know the best trading opportunities will come after a deep pull. pullback off the highs, which is why this strong move lower is setting up for a beautiful seller failure and a move back up to retest the high tomorrow morning. It's easy to see the bulls have control in the long term, but in today's session, every new high was clearly sold, which tells me that buyers are in control, but they aren't okay with buying high, and I should be looking for buying opportunities at a lower price tomorrow morning. So I've identified a key support trend line to use for buying opportunities, and I've got that deep pullback right into our battle zone waiting below. As you can see here right now, it's very, very tempting to want to buy this market as it goes up to try to reach that prior week high. The big concern, though, is that in today's session, every time we made a new high, it seemed to get kicked back against us here. So we're definitely seeing some rejection right off of that high, right, trying to go into that prior week high here. Let's zoom in a little bit closer. Coming out of last Friday's session, you can see strong move up in last Friday's session. They pull back, right? They make a new higher high, and that creates our spike and channel. Now, spike and channel patterns are notorious for deep, deep pullbacks. How deep, you ask? All the way back to the first two pullbacks after that big run higher, right? So these two areas at 57 and we'll call that 49, those are definitely areas of interest. We might get a chance here for a deep pullback, then a rally back higher, maybe not tomorrow, but towards Wednesday, Thursday this week, right? If we do go lower here on strength, this market will turn bearish, so I do need to be aware of that. But keep an eye out for that battle zone down there at 26.57 to 26.48, 26.49 area as a key level of support coming in. Most important thing right now is, just like on oil, if I zoom a little bit closer here, just like on oil, we seem to be having a lot of, we seem to be having a lot of rejection here at these, right, at these highs. Then we see this big, strong move down shortly before, right, just before the closing bell here this afternoon. Anytime we see a strong move in one direction, we expect to see another attempted leg lower. So that's really what everyone's waiting for right now. They're waiting for that next leg lower here for the sellers. That will allow us now to anticipate where their stops are. That stop, of course, once it gets run, produces strength into another pullback, right, and a pullback back up, right, to retest the high. So again, looking for that strong move down, looking for another leg lower here. And again, it's really just giving this market time to let those sellers try to send this price lower. They probably will, right? When they do, that now tells me exactly where my stops are, and now I know where my entry can be for that seller failure off a 2-try rule, and then more importantly, right, the most reliable pattern, right, of course, being that breakout pullback on the way back up to retest that high. So a relatively easy scenario here. The key, though, is we don't want to get too aggressive right away here. We really want to wait patiently, see if we can get that second leg lower, and then look for that move, right, going back up, right, to retest that high for tomorrow. So as we go lower, 1 try, right, 2 try, failure, strength, and a pullback, and pullback back up to retest those highs here for tomorrow. We have the prior week high overhead at 82.25. I'm looking for it to go through that prior week high and finish a runner back up to retest the top of that channel. Now, like I mentioned earlier, the battle zone is way down here at 26.57, so it's easy to see this market could strong move down, pull back to the moving average, and strong move through. This could easily start to become very, very bearish as we go lower. The hard part's going to be that we got to resist the temptation to try to sell low. At that point, if the bears take control, I'm looking for a selling opportunity up off of this new hidden channel. But get to it early, because later on in the session tomorrow, we may see eventually this market jam up in the battle zone, run back higher, and look for that move going back up to retest that high, right? So as I mentioned, if we do get that second leg lower, just like on oil, right, if we do see that we got that strong move down, I'm expecting to see them try another leg lower. If they can get this second leg lower going on strength, that's going to give those bears control of this market. If they can get control of the market, I'm going to draw that new channel, let that new channel develop as it goes lower, right? And then sell, sell, sell off the top of that, right, of that channel, right, as it goes lower. Now, at that point, though, you're down inside that battle zone, right? You've got that rising support trend line. You get the base of that channel, right? So imagine something like this where it runs lower. There's a trend line coming down. We get back above. We hold, right? Get back above. We hold. Failure into strength, strength into pullback, right? And pullback going back to retest the high from there. So another option tomorrow, but again, this will probably come later in the session tomorrow morning, tomorrow afternoon, as we make a deep, deep pullback, give those sellers a chance to, right, to sell the sucker as it goes back lower, and then buyers will start coming in here, right, coming off of this low for that move going back up, right, to retest the high. In a bull market, buyers want to buy low. They don't want to buy high, and that's exactly what I'm looking for here tomorrow, late in the session for that short covering rally right here on the S&P. So again, if we do see that second leg lower, get to it fast for that selling opportunity going back down in. But then again, don't be surprised here if we end up seeing that failure, strength, pullback, and pullback back up again, right? Don't be afraid, right? Don't be afraid to buy this thing as it goes back up, right, into that range again tomorrow. So a little bit of patience goes a long way here for the buyers. I'm looking for either that seller failure in the short term or bears take control in kind of the medium term, right? And then, of course, long term for that move going back up to retest the high tomorrow. And again, I know I'm going over all the different possible scenarios. What if price goes up? What if price goes down, right? What about if price goes sideways? What happens tomorrow if we start seeing this thing do, something like this, right? Then what do we do? If we start going sideways here tomorrow, like gold right now, right? It won't surprise me here. A lot of times markets go too far too fast. Maybe we start seeing some lower highs, some higher lows here. We're still bullish at that point. So keep your eyes open on failures down below the low of that range tomorrow, right? So if we do start seeing go sideways here tomorrow, look for failures down below the low of that range. Keep on buying. Remember, it's a bull market until what? Until the sellers take control, and the sellers take control with strength going lower. We haven't seen enough strength going lower yet, right, to call this a bear market. And if we start seeing some higher lows, if we start seeing lower highs here, moving average flattens out, we really got to look at this as a range-bound market and look to buy the low of that range. Obviously, this will be later in the session tomorrow, but keep an eye on that here, right, on the S&P. Let's keep going from one E-mini over to the next, Nasdaq now. Nasdaq is bullish with a spike in range pattern and a nice little hidden channel pattern tonight on the chart to work with tomorrow morning. Much like the S&P, it's obvious the bulls have control, but every time price attempts another higher high, the bulls seem to get rejected. This clue tells us that buyers are really only comfortable buying low right now, which is probably why, right, all of these buyers keep getting rejected off that high. So my plan for tomorrow is pretty simple, right? I'm looking to buy, but I want to buy down around the lows of this range. I want to buy, right, without trying to buy into those highs, because it's easy to see those buyers get rejected earlier on in today's session. So I'm buying with seller failures, I'm buying with traps below those lows, and of course the target is to go back up and retest that high, right, tomorrow morning. I start out the session tonight on the Nasdaq with a nice big wide angle lens on this chart. We had a nice strong move up, right, we're pulling back. This is pretty much a spike in channel pattern. Yeah, maybe a spike in range pattern. It's really quite a, it's not really a definitive answer as far as what the structure of the market is. The one thing I do like though is to draw this trend line off those highs, bring it up off this low, and this gives me an idea of where some hidden levels of support are going to be to help me buy as low as possible. At the same time, I'm marking up those prior swings, right? These will all be levels of support. So the buyers have control right now. This is definitely not nearly as aggressive to the downside as we saw on crude, right, and the E-mini. The buyers definitely have control. I just want to make sure now that I don't buy into that high, right, of that trading range. And so this is where this range really becomes a concern for us, because you can already see, right, as I kind of zoom in a little bit closer here, you can see, sorry about that, wrong button there. You can see we had that strong move down, right? We're looking for that seller failure, but look what's happening right now. They're rejecting this move back higher, right? And that's obvious. It's obviously why. It's easy to see why, right? There's no space up here. The top of that range is right there, right? Look at this example real quick. On the Nasdaq, there's such little open space there before we get back to that high, right? If I can get the market to go a little bit lower here now there's so much wide open space down here for me to be a buyer. You know, the exact same thing is true on the S&P, right? On the S&P, right, we saw buyers rejecting here, but look at how much wide open space we have on the S&P. The S&P has all that wide open space overhead. That'll make it a lot easier for me and for other people to get excited about being a buyer here on the ES as it tries to go back and retest this high. On the Nasdaq, that's not the case. We get some big concerns about not having very much space up here. So naturally now, I want to get away from that resistance and look to be a buyer right at a level of support. So 1 try, 2 try. At that point now, we'll look for that seller failure into buyer strength. Buyer strength gets that moving average over, and we can buy off the low there. Dig in deeper. Right? Remember, whenever we have a trading range, you want to buy with failures below the low of that range, right? So here's that range, 1 try, 2 try, failure, go back up into that range. I want to buy off of support. I've got a little hidden level of support waiting down here. I have a little swing at 97.5, right? Swing at 72.25. These will all be areas of support that I can start getting excited, right, to become a buyer here. Most important thing is just buying, so we're not buying into that level of resistance. So once again, like I mentioned earlier, right, that is a failure, right? I want to see it go a little bit lower here. Get that moving average to come down. Give me that failure, right? Strength, pull back back into that range. Looking for 2 easy patterns going back up into that range tomorrow morning. Once again, like I mentioned earlier, if you don't know the terminology here, right? If you're not a client here at School of Trade, I got a great free trading class in the upper right-hand corner. Grab that free class in the upper right-hand corner, right? That will help you understand all the terminology, all the patterns, all the analysis, and you'll have a much better experience here with me on this nightly newsletter. So we're already going sideways. We know we're doing there. If we end up running higher here, right? If we end up running higher here without a deep pullback, really the hardest part at this point is going to be waiting to get back low again and buying low tomorrow morning. So if we do end up seeing the market run higher, in other words, you know, something happens overnight, we don't get a pullback we need, I'm going to keep waiting patiently here to buy low. That's why I said in the introduction tonight, the most important thing here for us tomorrow is going to be patience and discipline to make sure we're buying at support with a nice big wide open space, right, for a target there overhead. So even if we don't, right, if we pull back lower, that's where I really want to be a buyer here. But if we don't, if we just run back up, I'm going to continue to look for this as a channel. I'm going to continue here to look for a buying opportunity off the low of that channel. How do we turn bearish tomorrow? What would a bear market look like? Well, it's got some work to do. First of all, this move lower would have to be really, really strong. In order for me to even think about being a seller on this market, I've got to see some incredible strength going lower. Then I'll draw that channel down. I'll bring it back up to that high, right, and then look for sells off of that high. I'd be very, very careful right now trying to call a reversal on this market because, as you can see, this market, like I mentioned earlier, right, has gone so far, right, to the upside here that any deep pullback is likely to be seen as a buying opportunity. It's not going to be really ripe for selling until we see a strong, strong move. It needs to be quite clear that buyers have walked away from this, and if they do, right, we're going to go back into that range that we had from last week's newsletter. If you recall, we came off the low of that range, ran higher, right, ran higher, just kept on going today. So trying to get the deep pullback to buy off that low. If we do get that run back down, then we can find that new bear channel, and we can look for selling opportunities going back down into that range tomorrow morning. Time will tell, but we're definitely looking good here, right, for a seller failure going back up to retest that high at some point in tomorrow's session. How about some gold? Gold is a relatively easy market here to analyze. The Nasdaq and the S&P were relatively challenging. Euro is also pretty sloppy as well. But gold is really, really easy. Gold is range bound with a triangle pattern. It's basically a range. And that tells me to avoid trading breakouts, right? Don't try buying or selling breakouts and focus on failures using the 2-try rule tomorrow morning. So gold is definitely range bound. We see, if I zoom out a little bit closer here, a little bit further here, you can see that range drawing off these highs, off the lows, right? We're consolidating right in and around this, 13 area here. Nice lucky number there. And so as I zoom back in now, you can kind of see where this range is coming from here. And the most important thing about a range is you want to stay away from the middle and you want to fade the breakouts. Right? Stay away from the no trade zone, right? That's going to be where things get really choppy, really sloppy. And what you want to do is, on a range, you want to focus on what we call the 2-try rule, and that is we want to see the price try to go higher, 1 try, pull back, try again, and once we see that second attempt, I'm looking for that failure going back down into that range. Same thing is true to the downside. 1 try, pull back, 2 tries, buy it back up. Right? Now, sometimes we do get successful breakouts. Successful breakouts, we're going to see a strong move up, a pullback to the moving average, right? And that strong move following, right? That's the key. If we get that strength, pullback strength, which we always talk about on this nightly newsletter, that's the key to a reversal. And most importantly, that's the key to a strong enough breakout that we can actually trust. Think about it. Back here, right? We saw that big, strong move higher. Clearly, that was enough to break out of the range, but as you can see, it definitely wasn't because it failed and goes running back into that range. So the moral of the story is, the lesson for tonight is tomorrow is really question all breakouts. Be suspicious of all breakouts. Fade those breakouts until basically proven otherwise tomorrow. So strong move up. Let those buyers, right? Let those buyers sort of buy it at the moving average. If they fail, we know their stops are, right? Failure into strength, strength into pullback, and pullback back down into that range. 1 leg, 2 leg, failure, back up in. 1 leg, 2 leg, successful second leg. Find that new channel, right? Find that new channel. And I don't know if we're going to get this tomorrow or not, but I'm ready for it. My job every evening is to get my charts technically prepared. Tomorrow morning, I'll do a brief update with all my clients here at schooloftrade.com, and then we're going to hit those patterns based on what we're seeing at that time, right? So I want to be ready. I want to be ready, technically speaking, for up, down, sideways. I want to be ready for reversals. I want to be ready for all these different scenarios. That way tomorrow, when they do happen, one of them is going to happen tomorrow, I'm going to be mentally and technically prepared for it, and I can capitalize along with all of our clients tomorrow in the trade room, right? Strong move down, pull back, no failure. That's okay. Strong move through, new channel, sell off the high of that new channel, right, going lower. Most important thing right now, though, is get outside of this range. Get it up so we can sell it back down. Get it down so we can buy it back up. That's the key to success on a range-bound market. Fade those breakouts. Use the 2-try rule. Focus on failures and stay the heck away from that middle. All right, now possibly one of the most challenging charts of tonight's session is the euro. The euro is bearish in the long term, but this major bear channel combined with the range from last week, right, combined with this bear flag, all 3 of these are giving me clues that we have some great buying opportunities setting up for tomorrow's session. Again, it's easy to see the market's bearish overall, but this wide channel is going to want to rotate back to those highs, which is exactly where the triangle was from late last week's session. And on top of that, you have this bear flag with the sellers recently trying once, twice, 3 times now, most recently the trap high. This does not look good here for those sellers right now. So my plan for tomorrow is to look for these sellers to fail and then look for a pullback entry on the move back up into that range tomorrow morning. If I'm wrong and sellers do maintain control, I'm looking for a strong break lower so I can sell a retracement on the way back down to that measured move target tomorrow morning. So wrapping things up here tonight on the euro, it's relatively easy to see this euro is bearish. We have, of course, one leg, two legs, three legs down. We're going to measured move there just above that 19,200 level. You can easily see we get this long-term channel, and we're rotating beautifully here back and forth inside that long-term channel. I'm expecting at some point here to go back up to retest that high, and I'd like to see a move that I can get in on the way back up to that high, which also lines up with this triangle, if you recall, from last Thursday night's newsletter, right? That triangle was on our radar right around that big round number. So that triangle, which of course is a range, right? Because we learned that on gold, we're seeing this one try, two try. We should be looking for that move going back up to that big round number tomorrow. At the same time, we have that big bear channel. And again, we're expecting to see the rotation from the low back to the high, so we can then look for the sell back down from there. So again, we're definitely bearish in the long run, but I'm hoping for a bit of a short covering rally to give me a chance to be a buyer in the short term. The problem we have right now is, you'll notice, is that really up until just recently, the sellers have been trying to sell high, right? Sell high. At this point now, they've tried once, they've tried twice. This will be the third time now these sellers have tried. I've been waiting for this opportunity all day today. I was kind of expecting this little thing to be a trap high here, but with this rising support trend line coming off the low, I'd love to see a final seller failure, draw in a new updated channel, and then look to buy off the low of that channel early in tomorrow's session. So if you're trading in Asia or early parts of London tomorrow, watch for that next leg higher. Find that new bull channel. It'll be a little bit steeper than the channel I've got right now. What'll probably happen is if it does jump, it'll jump up. You want to draw that channel off those highs, bring it up off that low. It'll be a little bit steeper, right, than this channel we have drawn right now. You want to make sure you find that buy off that low, right? So you're not buying too high. The goal of this is to see some proof first that the sellers have failed, get the buyers control now, and then buy that pullback. It's a little bit too early to try to buy this market. It just is, right? We're not a bull market yet, but if I can see this market jump, wait for that pullback, buy at that support level. My objective is to get back up into that big round number. And at that point, boy, it's really anybody's guess, but my guess would be this is the triangle, of course, in the euro, right? This is one big move down for the pendulum swing. This could literally launch all the way back in the opposite direction. I mean, we could be looking at 2100 by the middle to late, part of the week this week if we get this rotation back up towards that big round number. Because remember, right, the amount of the move outside of that range, right? There's my triangle. When we break down and we end up breaking down, right, measure that. The amount of that move lower is almost always going to result, right, in that pendulum swinging back up in the opposite direction, again, equal to the amount that it went lower. So there's potential here for a really big move as we try to go higher. That's my plan for the buy side tomorrow on the euro, right? Looking for a nice move up, right? Don't chase it. Wait for the pullback, right, and buy on the way back up to that big round number from there. And then we'll play it by ear from there. We'll see how the market reacts from there. Now, again, I'd be obviously lying to you if I said we're not bearish, right? We're obviously still bearish here. We haven't seen enough strength going higher yet to call this a bull market. This is a flag pattern, right? And flag patterns, really the easiest way to trade a good flag is to get a nice strong move down. The key is strength here, because you're going to see buyers coming in at this little pullback, this little swing back here. So you don't want to really see the market really go strong to the downside and then grab that move, right? Grab that move off the moving average, for that move back down to that measured move. This happens quite often, actually, where it's a Y channel, right? Strong move down. We don't rotate all the way to the top of that channel, so don't hold your breath for that rotation back to the top of that channel. But more importantly, wait for a little bit more evidence these sellers have control, and then I can go in and look for that pullback pattern right on the way down to that measured move for tomorrow. If we can get that, that should be the end of it, and then we should see that move going back up maybe late in tomorrow's session, right? Once we kind of finish off this, right, this measured move. So again, a little bit too early right now to be a buyer, but definitely looking forward, right, to a potential reversal. At the same time here, I'm keeping my eyes open for another leg lower here so I can finish off this move down to that measured move. My gut tells me we go higher, but guys, I have to follow my plan. My gut instincts are not a trading strategy, at least not something I trust over the long term. So I'm waiting for more proof before we start looking for buying opportunities here on the euro. Boy, we've covered a lot here tonight on this nightly newsletter. We're almost 40 minutes into this video tonight. Boy, that time flies when you're having fun. If you're still watching right now, that tells me you are a dedicated individual and you deserve every ounce of success you get in this great business. As I mentioned earlier, I specialize in helping new traders earn consistent daily income with the business of day trading. The futures markets were built for day trading, and I've got a great beginner, intermediate, and advanced classes here at School of Trade to show you how to kickstart a new career and start earning the responsible way that consistent daily income that futures markets are great for. I've got a great free trial and a great free trading class. As part of that free trial, I'll also invite you out to join me as a guest in our trade room. So grab that free trial right in the homepage of our website. I'll put all the links, the description of that YouTube video. Once again, in the upper right-hand corner is also a link for that free trial, the free class as well. While you're here, don't forget you can learn more about our beginner, intermediate, and advanced classes. We have a place for everyone, whether you're brand new and you know nothing about trading, or whether you're a grizzled veteran and all you really need is the right strategy with a little bit of coaching in the trade room, right, to get this done properly. Our beginner, intermediate, advanced classes are great for you guys. And don't forget to hit me up on live support if you have any questions along the way, or pick up the phone and call the office. We have a toll-free phone number right there next to my ugly mug. I look forward to speaking with you guys, right, about your trading goals and helping you get started as well. Guys, great start of the week this week. A great day today in the trade room. Right, Monday in the books. Tomorrow's Tuesday. We'll see you guys tomorrow, 8 o'clock Eastern time. If not, come back and see me again tomorrow night. We'll do it all again with our favorite markets and be ready, right, for the following day's session. I'm out of here for now. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.